Hi, folks. Dan Bird here on March 17th. Happy St. Patrick's Day to everyone. And this week is Max Payne week. I mentioned last week that if I had the report, I would do the Max Payne tonight on tonight's video, and that's what we will take a look at. So Max Payne, I've talked about this in the past, and I mentioned last week that usually just a quick, easy way to think about it is if the market had been typically going down, then the week of options expiration will usually be the opposite. It will reverse and go up, and vice versa. And that's because market makers don't want to pay out all the premium. They would rather see options expire worthless by Friday, and that way they don't have to pay out billions of dollars. We'll take a look at the actual numbers here in a minute. So that's what Max Payne is all about. We'll take a look and see what it looks like for this week. But first, of course, I am not a financial advisor, so I do this for educational purposes only. You have to make your own investing decisions. So let's take a look first at the market. And the first thing you'll notice on the homepage is the market bias finally starting to move up. Just a few of them gave bullish signals. If it continues this week, as I think that it could, doesn't mean it has to, but I think it could. Then we will get more bullish signals as the week goes along. And you can see on the market bias page, you can see the bullish signals, utilities and energy. Today, utilities up here, both a short-term and a medium-term signal. And those are the only ones though, but no bearish signals. So 4 bullish signals was enough to turn this up. And you can see 3 of those are in the short-term column. So you can see the orange line is moving up, which usually is what happens first. It usually moves up, and especially when it crosses over the medium-term line, like it did right here, then many times it will accelerate higher. So we'll see. That's what we'll be watching. Starting to change some of the colors up here on the week-over-week, day-over-day matrix. Just got a short-term green signal right there. So we'll see what that looks like tomorrow as well. One thing that I updated over the weekend that I'll just point out real quick, it's on for those that are subscribers, it's on the market bias matrix page. But I update this every week. And this is the year-to-date top 20 gainers and losers for the large cap and the small and mid caps. And I just want to point this out because I noticed some interesting things on here. SMCI is number 2 year-to-date gainer. Pretty good. Intel is moving up there. Micron is up there too. So quite a few semiconductors. You can look at the industry groups over here. Semiconductors are on there. Uber is in the top 20. Top 20 decliners though. Number 1, Trade Desk. Tesla is number 3. Marvell, number 4. So some of these names we've talked about before. Datadog, HPE. So these are all in the bottom of the large cap. If we look at the small and mid caps down here, these names probably will not be as familiar, but HIMS is on here. We've talked about that before. 2, 4, 6, number 7 out of 20 year to date. What else? Anything else of interest? Some of these have been acquired, like Triumph Group has been acquired, SolarWinds has been acquired, but they still show up on the top 20 list. And the lower ones, the bottom of the small and mid caps, Victoria's Secret used to be in the top 10. Tandem Diabetes is on there. It's actually 2, 4, number 5 out of the bottom. Abercrombie and Fitch had been number 1 for a long time last year, and now it is declining. So it's going down. Kohl's is on here. Some retail names. You can kind of look at the sectors over here and the industry groups as well. So it's just interesting to look at this once a week. I update it usually on Saturday morning. So over the weekend, if you just want to use this as part of your planning for the week, just interesting to see where the top 10 and bottom 10 are falling for the week. All right. Let's go back to the home page and look at the charts real quick. So the S&P for today, it moved higher on the day. You see it's continuing to rally. but it pulled back at the end of the day. So we'll see if this rally will continue. Normally, when we come off the bottom in the 3x, almost the 4x extreme on the Keltner channels. So these are basically the average range, average daily range, with the green one being 1 day, the blue one being 2 day, 2x, 2 times the 1 day, and the furthest one out here is 3 times the 1 day. Normally it comes back to the 21 day. So reverts to the mean right back up here. So we'll see what happens when it gets there. Doesn't mean it will stop. It doesn't mean it will reverse. It just means it usually gets back to the mean. And then we'll see what happens. Let's see. NASDAQ's not working. How about Bitcoin? Okay. Bitcoin didn't do much today. So it almost recovered the losses from the weekend, basically. So here's Friday, Saturday, Sunday, and today. So usually there's low volume over the weekend. So this sort of started from the middle of Friday's range and went to the top of Friday's range. So not too impressive, actually. And it's almost back to reverting to the mean right now. And very low volume, even for today. You can see the weekend usually is low, but even for today, very low volume on Bitcoin. It is in a squeeze, however, interestingly. It's in a daily squeeze up here. So I don't know how long it could last for a while, like it did back here. Of course, this one fired to the downside. So we'll see. We'll see what happens. Continue to check back. I don't know why my NASDAQ one's not working. No. Nope, that's not it. I guess I'll have to fix that. There it is. NASDAQ 100. All right, so notice the momentum is starting to curve up. So very, very oversold last month or so. This is not surprising that we're going to get a rally. Just depends on how far the rally will go. We've got the 200 and the 20, 21, basically right there at the same place. So that could be major resistance when it gets there. It's also a reversion to the mean. So we'll see what happens. It either will reverse or blow through it, but we've probably got till the end of the week. Now the Fed meeting is on Wednesday, and I don't think the Fed's going to do anything. I think they'll probably keep things the same. We'll see how the market reacts to that. I think the market is expecting that as well. So I don't think it'll be a major event. So we'll continue to watch that. Let's go back and check out the dashboard. So the dashboard equities were up today. You can see S&P, the Dow up almost 1%. New York Stock Exchange was the biggest winner. Toronto actually was better than the US. And mid caps were actually better than all of them. The VIX at 20.5, coming down, but not yet below 20. But it's good news that it's coming down. If you look at these are the technical rankings. So these are the strongest technical ranking based on, according to stock charts. So Rubrik is number 2 today. Palantir is number 4. It's up there. So that's the low. We can look at the low. Of course, Trade Desk, as I mentioned before, at the bottom. Kava is down there too. Kava continues just to disappoint, basically. These are the ones that had the biggest moves today. So Domino's had a big spike. I'm not sure if they reported or not. Carnival recovering today as well. So that's interesting. Let's look at the sectors. The sectors I'm not all that impressed with. Energy had made a nice move today, and utilities, which is down here, also made a nice move. But real estate is one of the defensive sectors, and it was going up. Staples is one of the defensive, and it's number 3 on the list. So I don't like the fact that the market went higher, but driven primarily by defensive sectors. Down here is communication services, went up a little bit. Technology right below it, also up a little bit. Consumer discretionary is at the bottom. So that's not the way I would like to see it if we're going to get a rally. Advancing over here, you can see a lot more advancers than decliners. That is a good thing. Regardless of what this shows you, this is just alphabetical here. So You can see the biggest advancers, energy. These are the stocks in energy. Had 78% of those were advancing. Real estate, 83% were advancing today. So that's very positive. And then we can go down here. Adobe reported last week and looks like they missed. And down here, see if there's any interesting industry groups. The only one that I think is kind of interesting is US mining down here. That's kind of coincides with gold. So if we go back to the website, to the charts page, and we look at the materials sector, and mining actually was in the top 10 last week. If we look at that, the stocks in that group just for today, we can see these names were at the top for today, up 11%, some of these. But let's look at for the whole week and see what's up there. See if there's anything that looks familiar. Not too familiar with the mining stocks. So MP is one that's been at the top of the list for quite a long time. So I think that's a pretty strong one. But those that are into mining probably might recognize some of those. So that's the one out of the top 10 in the on the dashboard that looked interesting to me. Then our top 10 lists over here, the ones that are at the top. Robinhood moving up. You can see they're all moving off the bottom. CRNC moving off the bottom. We'll go to the second level. Alibaba, HIMS is in the second group, just barely moving. Third group, Spotify is in there. Arlo, the worst performers, Gorilla, which is just bouncing up and down. So this one's very volatile. Let's go one more back. DocuSign, trying to make a recovery, but today pulled back. WGS, which had been doing really well last year. All right, so let's now, I want to show you the market cycles, because this is something that I've talked to people about. I've mentioned it on here, and I promised that I would show you an updated view as we move along. So this is what it looks like. This is actually as of today. So this is an updated chart. You can see it came back right to this 38% level right here. The line in the sand that I mentioned when we were going through the distribution phase up here, and I talked about this for quite a few weeks, that I thought we were in a distribution phase. You can look at the market cycles down here. This basically is Dow theory. So this is how markets typically work. And there's an accumulation, a markup phase where everyone, or a participation phase as Dow called it. Then a distribution phase. This is where Wall Street is selling to retail investors who keep wanting to buy, but Wall Street wants to get out. And then finally it breaks through the bottom. And that bottom, I've said for quite a while, the line in the sand is 58.50. And we broke through that finally and continued straight down, almost without pause. Just kept selling all the way down. And then we got down here to the 50% Fibonacci level. And that's where we started to go up on Friday, actually on Thursday a little bit too. But Friday and today, so only 2 days so far, but we made it back to the first, actually 2 Fibonacci levels. We made it right back to that area. And I think we're going back to 58.50. I think that's where we're headed. We'll see. We've still got the 21 and the 200 to get through right in here. We'll see what effect the Fed meeting has on Wednesday. But you can see how similar this looks to the Dow theory market cycles. So there's the bounce that I've been expecting. We're just beginning that. We don't know how far it's going to go, but I want to watch it. I actually might go into inverse ETFs if we get rejected up here anywhere in this area and start heading back down again, because I think the next down leg will be lower than the previous one, just like you see it here. So keep an eye on that. The second thing is I'll show you from Stock Traders Almanac what their view over the last 75 years, what typically has happened in March. And you'll notice today, so this one's today right here. Today we did go up. Tomorrow, historically, we don't do anything. We just kind of go sideways. And then Wednesday, we start to move up again. Now, keep in mind, the end of Wednesday is the Fed meeting. So is this telling us maybe what's going to happen during the Fed meeting? Because after that, for the rest of the week, it sells off and basically comes right back to where we are right now. But that doesn't mean this will happen. This is just historically what has happened in the past. And overall, the market has been higher by the end of the month. So we'll see. Just wanted to point that out to everyone, just so you have all of the information. Options expiration is on the 21st, on Friday. And with that, I want to talk about Max Pain. So we'll talk about options expiration and Max Pain. First, I would like to give a plug for Tom Bowley and his site, Earnings Beats. They have lots of great research. They put together a lot of really good lists. There's an ETF list, portfolios. They identify what they call their number one portfolio. There's lots of different tools in here. There's quite a few things that I use. One of them is the Max Pain report, which I'm going to show you, but I'm not going to show you the whole thing. And I'm not going to not only explain I'll explain generally from a high level what it means, what Max Pain means. But he actually has a spreadsheet that you can plug in your own stocks, and it will figure out for you what the max pain for those stocks will be. So there's lots of good content out here. Anyone that's a real student of the market, I highly recommend checking that out, even if you just sign up for the free one and get access to his live trading places that he does once a week usually, and his webinars that he puts on all the time. Lots of really good information. A lot of the things that I've learned from him among other people in the market. So I just wanted to give him a plug because I'm going to actually show you his report today. So first, let's talk about Max Pain itself and what Max Pain actually means. So let's see, right here. Here's the chart that I use. So this gives you an idea of what Max Pain's all about. It's essentially all the calls and all the puts. They all are expiring on Friday. And think of it as like a seesaw where it's trying to balance in the middle. So it's trying to get to the balance point between calls and puts. So if there are more puts that have been purchased, then the balance would be higher. So if there were puts being bought, let's say the price went down, it's at 342, and lots of puts are being bought, probably thinking it's going to go even lower, then Max Pain would indicate, because there's more puts than calls, that the market makers would allow the price to come up by Friday so that all of those puts expire worthless and they don't have to pay out the premium. I'm going to show you how much premium they have on the line. Same thing the other way. If the market had been going up like it was last month, then there's a lot more calls being purchased. The price is probably higher than 355 over here. So 355 in this particular example represents the balance, the equilibrium point between all the puts and all the calls. But if the market had been going higher, then the market is probably over here and it comes down to meet that equilibrium. If the market had been falling, then in order to get to equilibrium, it needs to go up. So the market makers will allow all of those buyers to just go ahead and buy, and they won't take the other side until next week sometime. So that's how Max Pain works. And what this strives to accomplish is, what is that balance point? What is the point where all of the calls and all the puts are equal? And that's what Tom does with his report, which I will show you here in 1 second. Let's see, where's my Max Pain report? Here we go. So this is the one just came out today. I'm going to show you a little bit of it. There's Tom and Aaron. It's actually his daughter. It explains what Max Pain is all about, that he's not a registered investment advisor, just like I am not. But here's what Max Pain says for the market, essentially. Now, this is as of the close on Friday. And in fact, let me go over and take a look at, let me bring up a price get a good chart. Okay, so I'm going to use this one. And let's look at the SPY first, see where we are today. So keep in mind that those prices were for Friday. So the SPY for today is at 567. So what did Max Payne say? 573. So not too far away. It's only a 2% change. And one thing I want to make clear is this does not mean that this is the target that it will get to. It only gives you a directional clue of which way the market might move. So if you are used to, because the market has been going down recently, if you're used to buying puts and you think you're going to go into this week and continue to buy puts, it would be really helpful to know that Max Payne indicates that the market's going to go higher so that you could maybe wait a little longer, or if you're doing very short-term puts, switch over to calls instead. So it does not mean it's going to get to 573. In this case, it very well might because it's not very far away. However, it just gives you a directional view. When I looked at this last month, these were all negative. So the market had been going up. So Max Payne last month meant the market would go down, and that's exactly what it did. In fact, it continued to go down for almost a month straight. All right, let's look at the Qs. Max Payne for that is 489. And let's see where that is today. It's at 482, pretty close. So that one actually might get there. And then IWM, the Russell, Max Payne. Remember, these are Friday's closes over here. 216 is the Max Payne point. And let's see where it is. It's at 205. And it had a strong day, actually stronger day than the S&P and the NASDAQ, it looks like. So it could easily get there. The 21-day is at 209, almost 210. 215, the 200-day is at 217, almost 218. So it very easily could get up here to 216 in this area. And then, as I said, with everything, with the whole market, we're going to see what the market wants to do when it gets here. I think it probably is going to head back down. We may get this little bit of a rally. There's the trend line right there, right around 220, basically where all of these moving averages meet. So this is all resistance right there. I would not be surprised at all to see the market get rejected when it gets to that level and start heading back down. All right, let's look at a couple of more in the Max Payne report. So here's Meta, 626 for Meta. Let's see, that was as of Friday. Meta is at 604. So the 50-day is 654, the 21-day is 638. So 626 is actually just under the 21-day. Very easily could get there. What else? What other interesting ones on here? AMD has been beaten up a lot lately. So it was at 101, basically 107 is the Max Payne level. Let's see where it could get to. AMD. So it's at 104 right now. 107 is definitely within the realm of possibility. 21-day is at 104. So that's actually over that right now. It's above that. The 50-day is at 112. So somewhere in between these two easily could get there. So I think the Max Payne report this month is actually looking pretty accurate. What else we got? Anything else of interest? Google, we're not live, so you can't tell me what you'd like to see, but you can see all the names in there. If you join Tom's site, you can go in as a trial and download this report from there as well. So Visa is down here. Visa needs to go down to hit Max Payne. That means it's been going up lately. That means there's more calls than puts on Visa. So let's see what Visa looks like on the other side of this. Visa 334 right now. So it's just below its 50-day moving average. So it could, it doesn't look like this one's going to go down this week, but who knows? It's moving higher. Like I said, this does not predict what the price is going to be. This only tells you the potential direction. Here's Micron. 97.34. Micron has been doing pretty well, like it does often. I'll show you the chart. We talked about this before. You can see right there, this chart basically is just bouncing off its 200-day, and it hit there today, just about there today, and got rejected. Looks like momentum is moving higher, so it might continue to go up, and potentially, if we put a horizontal line in, say right at hit this area, so around 112, potentially it might get to, but it's been hitting off, it's been getting rejected at the 200-day. So if that may happen again. If it doesn't, if it gets through it, that will be a strong indication that it might continue up here to 112. So we'll have to see how that does the rest of the week. But this one likely will not hit its max pain target. All right. So that's max pain for the week. I think the whole market is probably might rally. It doesn't mean straight up. We could be choppy. Probably is going to depend a lot on what the Fed does on Wednesday. So stay tuned at the end of the day on Wednesday. Let's look at the 10-minute chart. I want to mention something on here too. So the 10-minute chart today, you can see right here, ever since Friday, it has been trending higher. There was a downtrend line that went right across these tops, and it broke out of that on Friday. Right now we have an uptrend line now that it's getting very close to. Now, notice the last 10 minutes, big sell-off right there with huge volume. But notice what happens every day. Every day, the last 10 minutes of the day, this is standard practice. I've mentioned this before. That's what the market does in the last 10 minutes. That's market makers rebalancing their portfolios. And if it had been going up, then it makes sense that they would be selling in the last 10 minutes because they take the other side of the market. It does not mean it will continue down, even though it could, but this on its own does not mean that. So you see here, this one was down and it did continue down. This one here was up and we got a bounce the next day. So this one is down, but we bounced higher the next day. So just remember, this is something that happens every day. The last 10 minutes of the day usually does not mean anything. It's just market makers rebalancing their portfolios. Technology, financials are doing well. Discretionary communication services are lagging. Industrials look pretty good. And then on the defensive side, healthcare is lagging, staples lagging. Energy and utilities are the two strongest ones right now. And materials is making a comeback as well. So, in fact, we'll take a look at gold real quick on the market bias matrix. Very quickly look at gold, which is right over here. And gold continues to move higher. So that's looking pretty good. By the way, for those that are subscribers on the charts page, I put some new charts down here. This is on the charts page at the bottom in the blue column. These are the inverse ETFs. So I did something similar to what I did on the portfolios page. So if we look at the inverse ETFs for the Q, for the NASDAQ, you can see that here's the long version QLD. This is the 2X long, and this is the inverse, 2X inverse. So you can see they are mirror images of each other. And this chart up here is a relative chart, meaning if it's going down, then the bearish one is outperforming the bullish one. And that's what's been happening ever since the middle of February. Right now, it's starting to curve back up, but it has not crossed any of these. None of these have crossed over the 21 yet. So even though it looks like it might be an opportunity to get in, and if you wanted to play it for a very short term, you certainly could do that. But I'm not sure that this rally is going to last too much longer, maybe the end of the week, maybe into next week, probably into next week. We shall see. But just wanted to point that out for anybody interested in any of these things over here. There is one for gold, also one for gold miners on here. So here's the gold with the long version and the inverse. So as you can see, if you had been in the long version right here where the moving average is crossed and where the relative chart crossed over, meaning the long was outperforming the short, then you could have made a nice profit right up through that period, up to 120, starting down here at about 95. So that's a way that you can use some of these charts, especially if you want to get in on the downside, which if we do bounce and get rejected, then that very likely could happen. And then one last thing that I added on the chart list page is I've now put on the list of short squeeze candidates. So I will update this every weekend. It shows you here what the criteria is. So short interest percent of the float is more than 20%. Average daily volume, so it has to be liquid. Market cap more than 250 million. The universe is US stocks, and they're optionable. There's 42 names in there right now. And the thing to look for, and this is what I do, I have a scan that scans for the ones that have high volume and that are breaking out. That's when short squeezes typically happen. Now, I want to caution, maybe I'll actually put this comment in here. These are short squeeze candidates for a reason, because lots of people are shorting them because they don't think the company is going to do that great. And the stock just continues to go down. But when a squeeze happens in a very short amount of time, they can explode higher for those that are short-term traders. So all of this now is right on the website on the chart lists and scans page. So for those that are interested, breakpointtrading.net is the website. The YouTube channel link is right there in the upper right. And the free newsletter is in this little box right here. And I want to thank everyone for getting me over 1,000 subscribers. Thank you so much. I don't really know what that means other than it's a nice number, but I really want to thank everyone, and I appreciate everyone's support. Over the weekend, we finally made it over 1,000. Next time I talk to Mr. Zuber, for those that check out his One Rental at a Time channel, we talk every Sunday and discuss the stock market. He should be back this week, I think, from his trip. So I'll be excited to tell him that we made it over 1,000. Thanks to lots of folks from his channel, by the way, as well. So thanks everyone for watching. Have a great day. Tomorrow is Technical Tuesday. I will be doing risk management and position sizing tomorrow, explaining how important that is and how you can do it. So stay tuned tomorrow. Thanks for watching, and I'll talk to you later. Take care.